Hello everyone. Today's topic absorption in corporate accounting. Here we can see one problem. Balance sheet of Harry Limited and Boy Limited has been given. The information regarding the balance sheet, share capital, reserve and surplus, retirement gratuity fund, sundry creditors, coming to assets, building, machinery, goodwill, stock, data, bank. The information have been given. Hari Limited observe Vayu Limited on the following terms. There are four information regarding that given. First one, 10% preference shares are to be paid at 10% premium by the issue of 9% preference shares of Hari Limited. Hari Limited here is the purchasing company. And goodwill uh, to be entered as 50,000, building 1,50,000 and machinery 1,60,000. Stock to be lesser than 10%, and provision for bad debts to be created at 7.5%, and equity shareholders of Vayu Limited will be issued for balance of purchase consideration equity shares at 5% premium. Here you can see the calculation of purchase consideration. So the goodwill assets taken over, goodwill, buildings, machinery, these information have been given in the adjustment. So that value alone we have to take into account for calculation of purchase consideration. So goodwill 50,000, building 1,50,000, machinery 1,60,000, and stock. The information is given here. That is, it has been taken over at 10% less than the book value. That means 1,75,000 is the original value. From that, we want to minus 10%, which is 17,500. So net it comes to 1,57,500. Then debtors, 1 lakh is the value, and 7.5 percentage on this is 7,500. Net amount 92,500. And cash at bank it's given as 20,000. So the value of the assets taken over comes to 6,30,000. And coming to the liabilities point of view, retirement gratuity is also a liability and creditors is one of the liability. So we are adding both, we'll be getting 1 lakh, and total purchase consideration now it comes to 5,30,000. Then how they are going to issue, that is how they are going to settle this purchase consideration. Let's see. That is, preference shareholders of Y Limited to get at a 10% premium. So 1 lakh rupee plus 10% means 10,000. So totally they are going to get 1,10,000, and 9% preference shares of RE Limited they are going to get. And coming to the equity shareholders to get balance of purchase consideration. So here 4,20,000 is there, and for that, that is 10 each means 40,000 equal to 5% premium also given, no? So 40,000 equity shares of RE Limited, and 10%, that is 5% premium they have given. So totally 10.5. So 40,000 into 10.5 is 4,20,000. So in this way, they are going to settle the selling company's purchase consideration. The purchasing company is going to settle the purchase consideration uh, payment. And coming to ledger accounts in the books of Voil Limited, that is selling company. So here, what journal entry will you pass? Realization account data to assets and liabilities account data to realization. So what are all the assets that has been entered in the debit side? Directly we are entering the ledger accounts here. So to goodwill, to building, to machinery, stock, data, cash at bank. So everything what is given in the balance sheet that has to be entered here, not the revised value is given in the information. That should not be taken into account. Only the information which is given in the balance sheet, that alone we are going to enter here in the debit side of the realization account. Coming to the credit side of the realization account, you can see buy retirement gratuity fund 20,000, buy sundry creditors 80,000, and buy Hari Limited purchase consideration 5,30,000. So in this, credit side is more 6,30,000. If you minus the assets, you'll be getting some difference to the extent of 50,000 rupees, and the difference, if the difference is on the debit side, means it is profit on realization. Suppose if the difference is on credit side, means it is the loss on realization. But in this particular problem, we are getting the difference in the debit side. So to profit on realization, transfer to equity shareholders account is 50,000 rupees. And next ledger account, that is purchasing company Harris Limited. So here to realization account 5,30,000, and in which form they are going to get. In by 9% preference shares 1,10,000, by equity shares in Hari Limited 4,20,000. So that account get tallied. Coming to the preference shareholders account. So for that, already they had 10% preference share capital in the existing company, but they are going to receive 9% preference shares in purchasing company. So to 9% preference shares in Hari Limited, and old the balance is there, no, by 10% preference share capital that has to be entered in the credit side, and premium also paid. So by realization account 10,000, and this also get tallied. Then equity shareholders account, in new company, in purchasing company, they are going to receive equity share capital to the extent of 4,20,000. So what entry will you pass? Equity shareholders account data to equity shares in Hari Limited. So that's why we are repeating that. And coming to the credit side, equity share capital 3 lakhs rupees, and surplus, that is what are all the accumulated profits have been in the existing company, in the selling company, that has to be transferred to the equity shareholders. So in the here we have equity share capital 3 lakhs, surplus 70,000, and profit on realization. In the realization account, if we balance, we got profit on realization, that also to be transferred to the equity shareholders account. So that's why we are transferring it in the credit side of the equity shareholders account. And coming to the journal entries in the books of Hari Limited. What is the journal entry? First journal entry will come. Business purchase account data to liquidator of Oil Limited 5,30,000. Then goodwill account, building account data, machinery account data, stock account data. That is what? Sundry assets account data to liabilities. If the balance is on the debit side, that will be debited to goodwill account. If the balance is on the credit side, it should be uh, transferred to the capital reserve account. In this particular problem, we can see goodwill account 50,000, building account data 1,50,000, machinery account data 1.6, stock account data 1,57,500, debtors account data 1 lakh, bank account data 20,000 to provision for doubtful debt, to retirement gratuity fund, to sundry creditors, to business purchase account. So here being assets and liabilities taken over, and then that is payment of purchase consideration, that entry we have to pass here. So what is the journal entry? Liquidators of Oil Limited account data to 9% preference share capital account data 1,10,000, to equity share capital 4 lakhs, to securities premium account 20,000. So being the payment of purchase consideration. So in this particular problem, they have asked to prepare the necessary ledger accounts in to close the books of Oil Limited, and also the acquisition entries in the books of purchasing company. So I hope you all understand today's problem in absorption. Let's see some other problems in upcoming video. If you like this video, subscribe and share with your friends. Thank you.